Exela Technologies, one thing's for sure, it's got a bumpy road ahead of it. Hi again, everyone. I hope you're all doing really well. So, as I've sort of suggested in the title name, I do perceive more bumpy days ahead for Exela Technologies. Not that I'm giving investing advice. Now, looking at what happened on Friday, this was a real gut check for those holding the stock. We lost about 23%, dropping by over $1 on the day, $1.44 by memory, and we closed the session off at $4.91. Down 23%, and there was a slight bleeding in the aftermarket with a further, I think, 7 cents given up. Now, this is a bit of a reminder, I suppose, that's a dramatic move, and what this does is it puts the stock at pre-split value of just under 2.5 cents per share. So we're not quite the lowest the stock's been. That happened the day after the reverse split when it fell to $3. But this is, we're kind of getting back down that territory. So with the stock, we've now gone 5 days since the reverse stock split, which means we are now halfway through the trip to regain NASDAQ compliance. Now, I think part of the reason why the stock's being weighed down right now is obviously there's a lot of shorting action going on. It doesn't seem like much on the surface because only 2.5% of the float is shorted, but you got to keep in mind there's only about 15% of the free float that's being traded outside of institutions. So 2.5% of the float shorted is basically the equivalent of 1 in 6 shares is being held short. So if you extrapolate that, on a larger scale, you're looking at something about like 17-18% of the float being shorted. It's rough maths on top of my head there, I might be wrong. So there is a very small number of shares that are able to influence the stock price quite a lot. And then, you typically see this in any sort of trading pattern. When you have low volume of any sort of trade, it can actually lead to quite dramatic fluctuations in the price. And I think because we have such a low volume of shares available for trading at the moment, we are seeing those significant movements in the stock price. Also, and it's obviously part of the reason too is obviously the number of shares outstanding is so small right now. It's like 6 million or something like that. And, so it doesn't take much to have these dramatic moves. Anyway, so what lays ahead? What do I think lays ahead? Well, we've got 5 more days till we regain NASDAQ compliance. And I suspect we're probably going to see a bit more of what we've been seeing in these last 2 sessions. There's going to be a lot of downward selling pressure. I don't think the retail scene is really ready to galvanize behind Exela and push it for a short squeeze. Yes, it could have a little bit of a short squeeze because there is that small but concentrated short interest that could be pushed, but I don't think the retail appetite is there. Generally, I don't think it's the retail appetite's looking for a big long-term short squeeze. They might be looking for a little bit of a pump and dump sort of rally, but that's about it really. So yeah, I wouldn't be putting my eggs in the basket of a short squeeze. So a bit more selling off going this week. Once we get to Friday, it'll be a little bit different then, because we'll kind of have the proverbial monkey of NASDAQ compliance taken off our back, provided it can stay back up above the $1 mark. We've still got a $3.90 cushion to get through, to burn through in those 5 days, but based on the way it sold off on Friday, it could really get down to that point in 2 or 3 sessions. So you've got to be careful there. Hopefully we start to see a bit of support come in for the stock. Anyway, once we get to the Friday, that NASDAQ compliance is suddenly being met again. That might actually provide a bit of relief for the stock because that threat is gone. And there are a couple of positives about the stock. In terms of their products that the company sells, they are one of the leaders in their field. They've won several awards, and they're quite, actually, if you listen to their recent investor call, they were quite ambitious about being able to achieve high-performing awards in other categories too. But besides that, the company's actually also been on a bit of a sequential improvement from quarter to quarter. So there is actually a bit of operational momentum for the stock. I've kind of said this on here a long time. The company itself, the products they sell, obviously quite good, and it shows the fact that they still turn over $1 billion in revenue a year. Obviously, when they did a big corporate restructure about 5 years ago, as a way to sort of solve problems that they were experiencing, there's a legacy of the existing problems, and there has that strategy obviously didn't deliver as well as they'd hoped for, and there's just been this compounding debt problem, which is only being made worse now that we've got an environment where interest rates are going up. Anyway, but Exela's taking moves to rein this stuff in. End of the week, that gets us to basically end of May. We've got to then kind of navigate through June, July, and possibly August. And then that's when I think we might start to see something come on that XBP Europe sale. That's, to me, that's the moment that is really going to turn things around for the company. Obviously, it's a unit that's been valued at $200 million. They'll sell, probably about 40% of it. So they'll take away $80 million, and they're going to use that $80 million to pay down some of their debt, which is obviously going to shore up the value of the underlying value of the stock. And also they earmarked the fact that they might undertake a bit of a buyback. Now, this company's market cap currently is sitting under $20 million again. So if they were to commit, say, $10 million to a buyback, that would, and just think about like how the stock's moving right now, $10 million, even $5 million, that would actually send the stock rocketing up. That's $5 million, buy and get rid of the stock, never see it again. That would put pressure on shorts to cover, like the 2.5% of the shorts that are covering. And that to be honest, that like whatever money goes towards that buyback, that's going to be buying the retail float. It's not going to be really buying it off the institutions. They'll be holding it tight. So it will be an absolutely catabolic rally if this does eventuate. Now, I say if this does eventuate, because even though it's agreed in principle that this sale is going to happen, there's still obviously regulatory hurdles that the company's getting through. I think one of them is obviously being compliant with NASDAQ listing requirements if they want it, because XBP Europe's going to be a secondary list. It's going to be a second listing, basically. And I'm pretty sure it's going to be listed in America on the NASDAQ as well. It's not going to be listed overseas, even though it's a European-based unit. So they've got to get the compliance in order. When that happens, I don't know. I think that's when we're going to really see the firecrackers go off in the stock. Anyway, like I said, I'm down in the hole now, because now we're at $4.90. For me to be even, I need to be over $14. So I know there's people who've been holding the stock longer than me too. So it's, whatever your buying price was, multiply the number of cents by 200 or $2, and you'll get like what your actual value is. Anyway, just thought I'd clear up where it's the weekend. We can take our time and breathe and not get too worked up about the stock at the moment. Anyway, I'd love to hear what you guys are thinking about XELA at the moment. Do you foresee it staying above the dollar at the end of this week? Do you think at $4.90 is still plenty of cushion for it to withstand any short selling action? Let me know your thoughts in the comments below. Thanks everyone. May the markets trend in your favor. Cheers.